Good to see you.
Baseline question, what are you expecting out of the CPI later today?
I expect that it's going to be, listen, what's happening month over month is we're seeing that inflation is hovering around the same sort of 5% annual growth rate. That's meaning prices are 5% higher than they were at the same point last year. However, in last month's report, we saw something unusual, which was core inflation seemed to be growing at a faster pace than the headline number. And the difference for the audience is the headline number of inflation includes food and energy, which tend to be more volatile than all of the other items that are in the CPI basket. So when core inflation is accelerating faster than potentially the number that includes the more volatile items, then you worry that inflation is going to be here for a while. And I think basically you asked me for the bottom line. That is the bottom line. Inflation is something that's going to be here for a while.
Yeah, so for core inflation, they take out the most volatile things and it's still going up.
And it's going up faster than it would be if you included. And the thing that people feel the most, Mitch, literally, I was at it. We went back to our house in New York from our house in Florida. I went into the kitchen. I had a bagel. I realized we had no cream cheese. I ran out to the supermarket to get cream cheese. It was $8 for a little tub of cream cheese.
$8.
So food, $8, right? Food is that one item that people sort of feel the most, whether they go to a restaurant or they walk down the aisles of the supermarket. So when core inflation, which includes housing and other services and all these other items that are in the basket, is accelerating faster, that's a worry for the Fed in terms of what they're going to have to continue to do to tamp down inflation.
Well, and we had the Fed hint at pausing rate hikes because they said, hey, maybe we're getting our job done here. I mean, the GDP growth for the first quarter was far below what we thought it would be. It was supposed to be about 2%. I think it came in around 1.1%. The Fed looked at that and said, we're doing the right thing here. But if the CPI is still high, they might not bring that pause in after all.
I think they will pause, although that may not have been your question, but I think they will pause. But the thing that's really flummoxing, I just made up a word, by the way.
Flummoxing.
Flummoxing. I think it's something like that, but it's 6 o'clock in the morning, so you can make up words. But I think that the real challenge is what we got last Friday, which is the jobs report. The jobs market continues to be strong, aside from the LinkedIn story you just ran. But the jobs market, we're still creating 200,000 plus jobs. So the Fed is trying to balance all of these things. And I think what they don't want to do by continuing to raise rates is start to choke off job creation. Because don't forget, they have a dual mandate. They have to maintain prices and full employment. And if they start hurting the jobs market by their own hand, then they've got a new mole to whack. So I think we're going to see a pause next month. I don't think we're going to see a cut, but I think we may see a pause.
Well, Fed Chairman Jay Powell said, I don't know, 2 years ago, a year ago, hey, inflation is transitory. Is that going to end up being like the worst statement of the decade?
I think it's bad for him. And I think it's even more bad for Treasury Secretary Yellen, who, let's remember, she had Jerome Powell's job. And, it's very clear that the Fed is supposed to be independent. They get jawboned by politicians, but they are supposed to be independent. The Treasury Secretary is not. She's the chief, advisor on the economy in the cabinet. And she was saying that it was transitory. So some of the policies that were coming out of the Biden White House that continue to spend and spend that fueled inflation, I think she's got more sort of blood, if you will, on her hands than Jerome Powell does.
I understand, but the Fed does have the responsibility to fix this problem, really. But I want to ask you, though, stock futures are already down. They're not down by a lot, but they're already down. The CPI information hasn't come out. Why do you think that is?
It's just a wait and see. And I'll tell you what will probably happen today. The inflation number will come out. It'll either be hotter than expected or colder than expected. I've given up making those predictions. If I was good at it, I would have, bet on that 19-1 shot in the Kentucky Derby. But the reality is the market gets that information before the market opens. They try to digest it. The futures move. the opening bell rings, the market goes in one direction. And then as the day goes on and traders start talking to one another about what it all means, then the market often takes a turn up or down. So I wouldn't, where the market opens will likely not be where the market closes. But what the market is looking for is some sign that inflation is cooling, meaning that the Fed will lighten up with the interest rate hikes.
Thanks for watching. Go to newsnationnow.com to find NewsNation in your cable lineup. And don't forget to click the red subscribe button below to get more of NewsNation's fact-based, unbiased coverage.